Hello everyone, welcome back to my channel. Today we're going to dive into one of the biggest investment themes in 2025, which is Donald Trump's Tariff 2.0. So in 2025, Donald Trump is very likely to start another round of tariff, just like what he did in the previous term in 2018. This means that there could be lots of implications for your investors, and this video we're going to explore this. Okay, so what have we learned from Tariff 1.0, which is what he did in his previous presidential terms? So let's take a quick look at the history lesson. Okay, so Trump's first round of tariff was announced on March 1st, 2018, and was officially imposed on March 22nd. Most of these tariffs lasted until the end of his term in January of 2021. During that time, the US imposed tariff on multiple countries, with China being hit hardest at $360 billion worth of tariffs, followed by Canada at $12.6 billion, European Union at $7.5 billion, and Mexico at $3.6 billion. What we have observed from Tariff 1.0 is that the biggest impact was a major strengthening of the US dollar. So when a country imposes tariff, its currency tend to strengthen relative to the currency of the targeted country. Okay, this is because tariff discourage import. Okay, in this case for America, discourage America to import from foreigners, because it makes foreign goods more expensive for US consumers, which in turn leads to fewer US dollars being sent abroad. Because people sell stuff to America to gain US dollar. But if they cannot sell, they cannot gain dollars. Okay, which leads to fewer US dollars being sent abroad, which reduce the global supply of USD. And the currency's value is determined by supply and demand. When there is fewer dollars available in the global market, the value of US dollar rises, because foreign businesses, governments, investors, they still need US dollars for trading. It's the global dominant currency. Okay, they need US dollar to trade, for debt repayment and for their foreign reserves. But with fewer dollar in circulation, they have to compete much more to obtain dollars. Okay, so during Tariff 1.0, the Chinese yuan fell about 12.6% against the US dollar from 2018 here to 2020. Okay, and it fell from 0.159 down to the trough of 0.14. This is the exchange rate, by the way. So what happened here in March of 2021? March of 2020. Donald Trump is still in his first term. He didn't leave the office until January of 2021. So what happened in 2020 is COVID. Okay, COVID changed everything. So China initially recovered faster from the pandemic and had a less impact to its economy from COVID. That caused the exchange rate to reverse. And most importantly, during COVID, what Federal Reserve did, they introduced a massive amount of stimulus, the massive amount of quantitative easing, and they floored the interest rate. Whenever Federal Reserve applies a weak monetary or loose monetary policy like that, that's going to weaken the US dollar drastically. Now this chart shows you the impact on other currencies. Okay, it shows you other major currencies. As you can see, we have euro, we have Japanese yen, we have Canadian dollar and Australian dollar plotted on the chart. This is their strength relative to the US dollar, and Trump trade war 1.0 or tariff 1.0 is being plotted here. And it's actually started a little bit before 2018, because to some people, this thing actually happened before they announced it, because he did signal that he's going to do something like that during his first presidential term. As we can see, very interestingly, the Japanese yen, they held up during the trade war 1.0. This is because Japanese yen is considered a safe haven currency during uncertain times. Investors flock to yen. Okay. In the meanwhile, Canadian dollar, Australian dollar, euro, they they were all suffering during the Tariff 1.0 era. Okay, now fast forward to 2025, if tariffs are reintroduced, we might be seeing a similar trend, which leads to our next topic: how investors should be preparing for it. Okay, so what should you be doing for Tariff 2.0, the upcoming one? Okay, so I think number one is to hold a U.S. asset. Okay, so if you live in a country that might get hit by a tariff, like if you're Canadian, you're Mexican, you're Chinese, you may want to diversify some of your portfolio or your asset holding into US dollar denominated asset. Okay, as an example, many Canadians, the homeowners, right, most of their wealth are tied up to a Canadian real estate. If Canadian dollar weakens in the future, their purchasing power will drop relative to US dollar. Okay, so number two, I think, is to hold US dollars. So if you already have cash, for example, you have cash as a part of your investment portfolio, or you have cash for your emergency fund. If you have cash sitting around somewhere, I think you can consider converting some of it to US dollar. Okay, I think the easiest way to convert US dollar is using IBKR or interactive brokers. Over 200 countries and territories can use this broker. Okay, I'm in Canada. I put my Canadian dollar into my IBKR account. I use that platform to convert into Canadian dollar. Anything less than $100K US dollar, they only take $2 fee as a fee. There's no percentage spread, no spread. Okay, unlike other banks or online brokers that I know, which they all collect a percentage spread in Canada. Now the next topic is can we invest in some ETF to take advantage of this theme, like a strengthening US dollar theme. Okay, so now let's talk about this one. This is one of the most direct way to bet on the stronger US dollar. There's this ETF called Investco DB Dollar Index Bullish Fund, ticker symbol UUP. UUP. The UUP tracks the US dollar index by holding long US dollar futures contract. It has a 0.75% expense ratio, aka the management fee, so it's pretty high. It's pretty high as an ETF. And the ETF have no dividend or distribution, meaning that you're purely betting on the price appreciation. Okay, and the ETF is currently managing $645 million in asset. And this over here shows you the current weighting of their currencies, okay, in the USDX futures contract that they are holding. This is pretty in line with the US dollar index. Now, this chart is a comparison of the UUP ETF versus the purple US dollar index. Okay, so historically speaking, UUP outperformed, okay, performed slightly better during the tariff or trade war 1.0 from 2018 to 2020. Okay, the UUP ETF was up 17% from 2018 to 2020, from trough to peak, and compared to a 13% gain in the US dollar index. Now, is it worth to invest in UUP? Well, here's my take. While UUP index could go up if tariffs strengthen the dollar in the future, but the risk-reward ratio isn't great for myself, okay? A 17% return over 2 years in Tariff 1.0 era was great. It's okay. It's decent. But you could have made over 20+% in S&P 500 during that same period, okay? Plus, we're currently in a rate cut cycle in terms of monetary policy from Federal Reserve, which could weaken the US dollar in the long run. Unlike 2018, when we were in a rate hiking cycle, it was a tightening cycle. Federal Reserve was doing QT. Okay, they were doing QT. Right now, we're easing the QT. We're lowering the interest rate. It's the opposite of 2018. Okay, so unless you're very confident in the dollar strength in the future, I have to personally look at broader investment opportunities and rather than chasing UUP or the US dollar index. Okay, the risk reward ratio is not there for me at the moment. Thank you very much. Please don't forget to like and subscribe.